Real Estate Investor Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, and capital raisers in the world to provide you with the tool sets, the mindsets, and the skill sets to help you conquer yourself, your life, your marriage, and use real estate as your wealth creation vehicle so that you can live a more successful, happy, and fulfilled life of growth and contribution. If what you're after is having it all, if what you desire is becoming the best version you can be across all areas, mentally, physically, emotionally, spiritually, sentimentally, and financially, you've come to the right place. We will bring to you the best of the best real estate entrepreneurs who will give you the insights, knowledge, experience, and skills so that you can go out and crush it financially and across all areas of your life. Grab pencil and paper, sit back, enjoy, and you are welcome to the Modern Real Estate Investor Podcast. Joseph, he's CEO and co-founder of Dreamstone. It's a real estate investment company. And he's the CEO and co-founder of Dreamstone, which is a rapidly growing multifamily investment firm with that is based in Atlanta, Nashville, and Tampa. Under his leadership, Dreamstone has moved from emerging to an established player in the multifamily space. Prior to launching Dreamstone, Vehano, chartered accountant from Cape Town, South Africa, and he was a Fortune 500 financial consultant. And he managed business mergers and acquisitions in the excess of $5 billion. So he brings an exceptional financial acumen and a bunch of experience, as well as managerial experience, to drive favorable returns to investors. So super excited to talk to you, Vehano. Thank you very much for being here, man. And you're welcome to the show.
Yeah, thank you for having me, Alex. It's a pleasure.
So, man, the first thing that I do with my guest is I ask them to walk us through their real estate investing journey in 75 seconds or less.
Yeah, so real estate for me, we started with a duplex in Tampa, and then the bug bit, and we went from duplex, 7 unit, 14 unit, 56 unit, 98 unit, 101, high rise, low rise, garden style, all across various markets, including Atlanta, Nashville, Tampa, and Texas, to name a few of the markets we're investing in.
Cool. So started with the duplex. How long ago was that, man?
I sold that duplex last year, so we held it for 4. Bought it at 64 door. No one was helping the tenant, the owner. It was just an expired listing on Zillow, something like that at the time, and I had immersed myself in all the real estate. Well, actually, let me back up before we even get there. So I'll give you my journey. So I'm originally from Cape Town, South Africa. Like you mentioned, I'm a chartered accountant. And so I worked in the public accounting space and audited large companies, Fortune 50 companies. Then switched to finance and consulting, management consulting, and spent 4 years doing that. With some of the largest institutions in the country, and at the same time looking at what vehicle is going to create the success that I need at the time, and clearly my W-2 wasn't meeting up with it, and so I reassessed. Okay, well, real estate may be the key, and specifically multifamily. We ended up buying the duplex just because at the time I'd saved up capital, and I thought, okay, this is a good idea. I'm well below the basis, and that the other properties are at, that it needs a little bit of money. Got some money set aside, qualified for the loan, did all that good stuff. Went out and acquired this thing. Used a property manager, and we ended up selling that property, I think, for 4 times that in 4 years. So
4 years later, that's crazy, man.
Yeah. Well, real estate. We then subsequently, I realized this is a business that I want to go into, and I met my business partner in Tampa, and we co-founded Dreamstone, and we went on to get to almost 3,500 units. We've exited 11 properties thus already, and we're back down to about 1,000 units. So it's been a wild ride. COVID accelerated that journey for us. We bought when no one else was buying, and we like to do that. That's when all the institutional players are out of the space and not crowding the market space. And yeah, that's been successful for us, and a model we're focusing on.
Mm. So that's awesome, and that sounds like a great journey. So it sounds like you had a good job, right? It wasn't enough though. So how did you land in all of these like financial and accounting things? Did you go to school for that, or how did that happen?
Yeah, so I'm a qualified chartered accountant, which is the US equivalent of the CPA. So I went to school, 2 degrees, and qualified with board exams, all that kind of stuff. So yes, I was on the path for, I would say, to be a partner if I stayed in that career.
Mm.
It wasn't for me. I realized early on that when you measure what you want in the future, it makes you ask better questions. And so what was part of the management consulting firm, which I will forever cherish, was it's basically a chapter out of Strategic Coach, which is Dan Sullivan's group. Strategic Coach, been around since the 80s. But, you know, taking your income statement and balance sheet and mapping it out for the next 12 months, 5 years, 10 years, 15 years, 20 years, 100 years,
You
if you
realized
so
you weren't going
if,
to
if
be
you
where you
so
wanted.
if you so choose, yeah. If you want to live 100 years, there's a better. You've got to make certain changes in your life today
Uh-huh.
there to get there. Same thing with your financials. You got to look at where you want to be and make those changes today. So I didn't know I was going to go into real estate. It just happened to fit
Yeah, you
that
came across
wealth
it. Yeah.
journey. Yeah, yeah.
Same for
So
me, man.
podcasts, books. Yeah. So I just
Let me
immersed
guess.
myself in it.
You read Rich Dad Poor Dad, huh?
Rich Dad Poor Dad was after I listened to, I think it was Michael Blank, one of his podcasts back in the day, and then Rod Cleef and all those guys, and started listening to them and, learning from them, and yeah, it definitely sparked the real estate fire. Actually, my first book that I read was Crushing It in Multifamily Apartments by Brian Murray, and you know, 2 years later he was in a deal with me. So it
Mm.
just shows you
Cool.
how amazing the world is, and how setting that intention can change your life. Yeah.
So you basically asked yourself a question, right? Like, what do I want? Where do I want to be in, I don't know, maybe 10 years? And and you realize that, your job and what you were making and how you were living wasn't going to take you there, right?
Yeah, don't get me wrong. I had a high paying
High paying
job,
job.
and it was really
But you
good.
wanted more.
Bonuses were good, but what they controlled was my time. And
Mm.
so my time, I realized having something on the side like real estate wasn't going to be uh, possible because I'm spending all this networking time. Actually, they incentivized us. So I was doing really well with going out and meeting clients and prospects. Um, so um, yeah, you realize that, what's the most important, most valuable thing in this world, and that's time, because you
Yeah.
don't get that second back. So, restructuring the way I thought about where I wanted to be. And then, real estate kind of fit that mold. Not that it's the only thing that we've done. I've acquired companies. We have all kinds of things going on. So, um, yeah, real estate definitely was the catalyst.
Okay. So man, going back to the first deal that you made, you bought a duplex. You
Yeah.
qualified for the loan. So could you walk me through how like the process of investing in the duplex? Maybe you had some money saved. How much did you put down, and how much was the loan for? Could you walk me through that process, please?
If I can remember. It was something like, yeah, so I had capital saved up from bonuses and stuff, and yeah, I set aside money over a 12-month period, and I decided, okay, let's invest this and have some reserves for renovations and that kind of thing. Because the model always has been find something that needs repair and fix it up and add that value to it. And
Yeah.
so that same philosophy is what I went out and I searched um for a few. This was like 6 or 7 months. It was like daily, just reaching out to brokers, and everything that the brokers were sending me I couldn't make work in my calculator. So then I had put together a calculator, and I was following that, and then I realized, okay, if you stick to this, it's all good, right? If it fits this parameter. And yeah, so I qualified for that and qualified for the loan. I think I took out like 55,000 or 50,000 was a loan, and put in like 15 grand and put in 12 grand worth of repairs, and sold it for $280,000 later. Yeah, it was a pretty good deal. And yeah, we repaired. Most important thing was the tenant wasn't being taken care of, and there was a huge gap from where their rent was and where it was supposed to be in the market. So
Yeah.
we went from 750 to 1,300 on the first, like by just putting in a lease, right? Because they were month to month. And so, I created instantly $750 a month of free cash flow.
Nice.
Well, cash flow on the property, and that's where the bug kind of bit, So that's how, yeah, that's how that deal went.
So that got you started. So when did you decide to like quit your job and go all in and start Dreamstone? Like, did that happen a little bit later, or was it like
No,
instantly?
no. So a month, I guess like a month into it, we started Dreamstone. We acquired a 7 unit from a couple that was going through divorce. We bought it all cash, renovated. There were 3 down units, and then I think we bought that for 150 and sold that for 380 a year later. So it was a good deal, distressed kind of deal, and yeah. So we started Dreamstone back then, spreadsheets and Google Drives, and try to stay organized between myself and Nick, and we I still kept on doing the W-2 until I think it was our fourth deal. We did our first syndication, and that was a 56 unit complex in Tampa. But it was a scatter site. It was I think it was like 5 different properties, 5 different owners.
Mm-hmm.
It was one of the hardest deals for us to do a syndication in, and yeah, it was a nightmare. It was literally a nightmare, like getting that closed, but we did it. And so what I learned was, just perseverance through it, making sure we're checking the checklist every day, making sure we're, you know, sticking to, that hitting that milestone of closing, right? And,
Yeah.
there were a ton of challenges back then, and we overcame them, closed the property. I think our average was about 64 door, and we sold that deal last year at 120 a door. So our investors made,
Nice.
yeah, very good return on that. Yeah,
Cool, man. Um, so you did your first syndication on your fourth deal. How much capital did you have to raise for that?
that's like 1.5 million, something like
Mm.
that. 1.5, yeah.
Was it did you find that did you find raising that amount of capital a little bit not hard but like difficult, or did it
Super.
happen pretty naturally?
No, no, it was super challenging. I think we had looked at a few other deals before to raise capital for that, but capital raising is not my strong suit. I can if I find like I can. I'm a more relationship guy, so I can have good relationships with key people,
Mm-hmm.
and that's where I enjoy. That's my flow. I'm not a mass marketer to lots of people. I just don't have that capability, I don't think. But where I enjoy is like special relationships with a few people, and try to keep quality people close to me. And typically those folks have large amounts of capital to invest. And so developing those nurturing those relationships over the years have have been fruitful. Obviously, you have to expand your relationships, expand your network over time, and that was we had like $50,000, $25,000 investors, that kind of thing. We learned
Nice.
a hard way. We did a 506B syndication, so private placement. So we didn't have. I think we found out later that most people that invest in real estate are accredited. There are a lot of like non-accredited, but in the beginning, but those were, we love to help those folks get to accreditation, right? You don't get
Yeah,
here
yeah,
without investing, and that's what the 506C people they've already been exposed to it, so they know,
yeah.
hey, let me invest in this,
They know they want to
and
invest in real estate, right?
correct. And
Okay.
it's a lot easier when you're dealing with somebody that knows what they want and not someone that coach and train, and which is fine. And there's nothing wrong with that. But when you're trying to close a deal, um, you know, especially in the raises that we're doing now, you're raising $25 million, you can't really do that with $50,000 checks. So
Yeah.
um, you
I mean,
can,
you
but not
can do it, but it's
painful.
hard, right? It's
Yeah,
hard. You
yeah,
need a
it's
lot of
really
people.
painful. Yeah.
Um, so what do you think was like the one or two most challenging things of that first capital raise, man? And and then what are some changes that you do now, right, to be able to get over those challenges or obstacles?
Yeah, I think so. In the beginning, it's track record, right? So,
Track
to get
record, okay.
anybody to invest in you, you got to know that the sponsor's got the track record, they've got the experience, the expertise. In our case, we had done deals before with our own capital and had, really good returns. So, it was just a matter of making sure that the investors understood that we're taking care of the asset.
You
When
know what
we're
you're
in
doing.
control, yeah, and it's not so we use third party management and all that stuff. Like it's all about being a proper asset manager and a custodian of people's capital, right? So that's the key for anybody that wants to go into syndication. Anybody that wants to, you've got to show that you've done your homework, you've looked at, the neighborhoods, the comps, you've walked it, you've put eyes on the asset, you've done your inspections and all that good stuff. And with and be sure that if it's a deal you like, yet you would invest your own capital, and if it's not, then stay away. So
Mm-hmm.
and the deal not done is probably the best deal um that you would do.
For sure. The way that I remember this, man, is fame and fortune. Fame and fortune, right? Like fame, you've done it before. You're not maybe not famous, right? But you have a track record,
Right,
right? You have some fame. You've done it before, and then fortune, like you're putting your own fortune in the deal, right?
right.
So if you can do those two, then you can probably raise some capital. So is there anything else that you think is challenging for any capital raisers out there, or any other challenge apart from maybe not having a track record or having to build one? Is there any other challenge that you see um, real estate investors being held back by?
No, I honestly, I think, it's again, it's like developing those relationships with those potential investors. I tried it, and I have invested. Obviously, I still have investors that I've shown everybody and anybody, here's the OM that I'm raising for this deal. If it's a 506C, and
Yeah,
I've got email lists, but um, you know, people don't. We have instances where people haven't invested with us since the first blast that we send out to them, or the first deal we send out. Maybe they invest with us on the fifth email, right? The fifth deal that we send out, and they're like, "Oh, these guys are still going. Let's invest." So I would say don't be discouraged if that first person that you think is going to invest doesn't, because it's just a time thing with people to build that trust in you. And um, so I think that's a challenge. It's track record, building that trust, and obviously having that relationship is super key to
no,
raising capital,
yeah,
in
yeah,
my
man.
opinion.
Fortunately, I'm like building relationships and networking is literally all I do. I literally connect with like 15 high potential people every single week. So yeah, I totally agree with that, man. And now that you have a track record, right now that you've acquired over 3,500 units, what have you seen change? Is it easier to raise capital?
Um, it's easy. I think it's, there's confidence that comes with it. I think it's easier to um to make the pitches right. I wouldn't say it's easier to raise capital.
Uh-huh.
It comes with the project and the capital that likes the project. We've kind of pride ourselves on being agile in the marketplace. So looking at, oh, does it make sense to buy brand new construction, or does it make sense to buy, you know, tear down workforce housing type of deals, right? So being flexible, looking at what plays with what environment, and so we're more in that, B plus, A minus, all the way up to new construction right now, where in the past we were largely focused on C class. And with C class becoming so much more expensive, and the willingness of tenants not to pay, with
Hmm.
the being
The fair price, fair value.
well, no, the tenants not paying their rents, with being taught not to pay their rents with COVID, there's a whole nother
Yeah.
mentality out there. So it's challenging. You've got to retrain tenants, and in certain markets, and you've got to weed out. There's potential fraud all over the show with tenants and trying to qualify for to get into your property. So great screening is required. I can't tell you enough about all the funny stories of false bank accounts and pay stubs and all that stuff, and even connecting it to Plaid or whatever. That's just a huge deterrent. People don't want to connect their bank accounts to your screening software. So there's definitely there's a lot of things that have become a lot more challenging. And typically when rates increase and things become more expensive, crime increases and that kind of thing. So we're cognizant of that, and so looking at the newer class, A class stuff, has been a big shift for
Hmm.
us.
So you started with value add properties. You started with duplex, you renovated it, and then you bought C class, and you started with the ideology of adding value to the properties, right? To raise the value and all of that. But now you've
Yeah.
changed to buying, newer class A apartment buildings. And then you also said that you praise yourself for speed and agility, right? So do you so and yeah, I agree with that. You've been able to go from a duplex to like over 3,500, and then exiting some of the deals in a fairly short amount of time. So would you say that investing in newer class A apartment buildings has been one of the keys, or what has been some of the keys for your agility and your speed, man, and
Yeah,
moving so
so
fast?
switching to something that made sense in this environment where the we have a good cash flowing property with stable tenant base, and it's the newest on the block, so people want to live there. I like that as a longer term hold. The stuff we had before, obviously, we would love to hold it for 5 years, but when people are making offers on your 5 year pro forma number, you've got to do your
Yeah.
your fiduciary duty to your investors and exit, because it's the speed of capital, right? It's the velocity of money that's important for those investors. And so yeah, we're I think where maybe we've changed from the past is now we're um, from speed, it's a little bit more slower, obviously, with the market the way it is today, but it's more thoughtful, slower, um, smoother properties. Like, so class A new stuff, newer stuff that needs slight light touches. But really, you're not swinging a hammer, ripping out walls and stuff like that. We just haven't seen the price per door drop to a sufficient low number for us to make sense of the
Got
you
it.
know the rehab model.
Okay. All right. So do you like investing in newer Class A properties better or
It's definitely a lot. Well, it all depends on the property and where it's located, but yeah, they're definitely a lot more stable, a lot more easier to manage, a lot less surprises, with old maintenance issues
for sure?
popping up in the middle of the night. Don't get me wrong,
Yeah.
there's stuff that happens, but and it's a lot less than, the water main broke outside and it's, backflowing a whole building or something, stuff like that happens all the
Yeah.
time in older vintage stuff. So,
I would
um,
imagine
yeah.
that those kinds of properties are more expensive, right?
Yep.
So so how is it that you handled? I don't know why my English. I'm struggling with my English right now, and I don't know why. I think it's because I've been speaking Spanish for the past like 2 weeks. But but yeah.
It's all
So
good.
how are you like managing, right? Like how do you manage how are you able to manage and make a profit from buying properties that are more expensive?
Yeah. So, we, you, in this environment right now, you're able to negotiate a more favorable price. I think if COVID has taught us anything, when the velocity of money, meaning money in the markets, are not moving, like when we had COVID, it was just flat and dead.
Everything
Like,
was shut down.
yeah, it was
Mm-hmm.
just shut down. And as soon as that money re-enters that economy, it was pandemonium, right? I mean, we were all there. Like you couldn't put in an offer. It was beaten out all the time by somebody. And so we think that there will be maybe not as a frantic because it's going to be slowly reanimated, right? So as the Fed in the future drops rates, we
Yeah.
think that, or at least my thesis is, an A-class building is going to be an A-class building for the next 5 years. So that
Mm-hmm.
cap rate has some insulation there. So whatever that A-class cap rate is going to be, it's lower than a B or C. So if we're coming down from the highs, how quickly is the C and the B going to go down? I don't know. I don't know how quickly, but I know A is going to be, a five, 4.5 gap, right? Whatever that is, in the future. But is that today? No. But is it tomorrow? I don't know. Is it the year after that? Maybe. So the Fed's giving indications that you know, they see a lower rate in the future. So that's gonna start bringing down those cap rates because there's more liquidity in the market, hopefully, and we'll see better deals get struck.
Mm. So the
So
so then
right
with the
now, so right now I'm building a stabilized cash flow machine, right? And then with upside. So what happens? These developers, they lease up at the lowest rate that they can get, and they have like pretty large concessions. Some of them, I saw in a deal the other day, they were doing 6 weeks concession. So
mm-hmm.
if you figure, you know, it's almost, it's like, call it 2 months, right? Let's say they give 2 months off. They do that here in Atlanta all the time, and people. So you have 2 months worth of rent discounted in the beginning just by bringing that property to market. You've created value, and
Yeah.
that on a A-class cap rate, isn't that value add?
Yeah. It is.
What would you have to do to raise the rent $200, or $300 on a unit in a Class C deal? You're putting $10,000-$15,000, right? So,
Yeah.
or costs are kind of all over the place today. But the example that I make is that the capital, whether you spend it now or later, you're going to spend it. So if you have a new asset right now, I'd rather park my capital in a new asset, lower maintenance, lower operational costs. You may have a little bit of operational costs on the lease up side, but once it's stabilized at 95%, you don't have to have three additional staff. You can cut staff down. You can, moderate those kinds of things. So again, there's value add. You cut your advertising spend. You cut your, there's things that you can moderate down, and so So for me, that's an operational value add, and then you also have the rent upside of that. And so if you're looking at a 5-year hold, well, yeah, it actually behaves like a value add. Now, I'm not
Yeah.
talking about the core deals in the middle of, Phoenix or the middle of, Atlanta over here. No, those are for institutional buyers that, want to make a 5 IRR. We're more focused on the suburban pockets closer to the city. So people that commute in, where there's a retail component, we like that.
Got it. Yeah. So a wise man once told me, every dollar saved is a pure dollar of pure profit,
That's right.
right? So yeah, like you're able to make more profit if you don't need five maintenance guys, right?
Yeah.
Hello, morning kings and queens. At my company, Millionaire Network Automation, we believe in the power of networking. We believe that in real estate, your net worth is your network. This is why we help real estate investors raise capital by connecting them with their ideal investors and helping them build a massive network of their ideal investors in less than 30 days and with only 4 hours of work per week. If you're interested in this, click the link below in the description of this podcast to learn how you can propel your growth with a reliable system that will consistently help you connect with your ideal investors, build trust, add value, get your investors to promote you and put you in front of more of their investor friends, and raise more capital faster and in a much more effortless way so that you can achieve your financial freedom and still have the time and the energy to pour into every single other area of your life. So go watch the training, and you're going to have the opportunity to book a call to talk about how you can get this 100% done for you system implemented in the next 5 days. So thank you for watching, and I'll see you later, and enjoy the rest of this episode. Bye-bye.
That's right. Yeah.
So
Then you have also run into, the other thing is supply chain has been so severely disrupted, right? And it still continues. Like it seems like it's okay, but there's still always like a delay somewhere or part or like one intricate part of this whole puzzle that's not there or available immediately. So that, those kind of things put me off on, right? You can't execute quickly, and I'm not a big operator. I don't have a warehouse filled with, every type of finish that we're gonna do. If I had to do it again and start off with a huge fund, I'd probably do it that way, have a standard finish, and just go renovate and keep it at that and keep the cost down. Basically, it's like a hedge. So we're looking at all of these things that impact the deal, and that's kind of how we ended up. And like I said, being agile, that's how we ended up focusing on this type of style of property, and maybe we do 2 or 3 of these a year. I'll be okay with that.
yeah,
Yeah,
yeah, for sure.
yeah,
So man, let me see if I understand this right. So when the velocity of money is like slower, right? Like meaning the economy is a little bit shut down. It's not moving that fast. That's when it's easier to buy more buildings. It's easier to
that's
buy.
when. Yeah, so who has a I forget who has the saying, but I think it was the Rothschild matriarch, and they buy when there's blood on the streets, when things are low, like buying the dip. The same thing with real estate when pricing. Well, real estate's kind of been wonky, but when pricing's flat or starting to come down, there's an opportunity to buy. You know where the ceiling was. You know where the top of the market was. We're not there. We're below it. So you know where it's going to go in the future. Real estate's a long-term game. So for us right now, yeah, I think now is a really good time to be buying at the right
Mm-hmm.
price.
For sure.
Not be pressured into buying it. And if you've got brokers are going to pull their same stories and tricks, but not being pressured into a deal and stay your ground. If it doesn't work at that pricing, then you can find another deal. There's plenty of transactions out there, and then transactions are happening, right? So I think it's patience. It's we've underwritten thousands and thousands and thousands of properties, and it's one of those things where you look at a lot of deals for one deal to make sense. And if
Yeah.
that one deal makes sense, doesn't necessarily mean you're going to win it, right? So Now, when things are a bit slower, you can you're more than likely, if you've done the right steps, so like you raising capital before the deal, speaking to people, hey, if I had this deal, would you be interested in that? Right, keep having that muscle exercise before you actually the day comes is so critical to getting these things done.
Yeah.
Especially in this environment, right? Because people are like, well, I don't know where the interest rates are going and blah blah. Everyone's like, well, scared. But right now, or they're like, oh, the stock market's going to go down 30%. But I'm like, if it goes down 30%, so what? It's going to go back up,
Mm-hmm.
right? Companies are going to prosper. This is America. We work hard and we play hard, right? So it's like we work hard, we get it done, and it's right now the fundamentals of companies haven't dramatically changed. It's just it's operating costs are way more higher than it should be, right? And so we'll see when the Fed gets it in check. But I think I think I don't know if we are at the bottom. And I know people say don't try to catch or fall enough, but I know the other opposite of that is just dollar cost averaging. So you may not hit it straight on the bottom, and some people try to time things, and yeah, okay. Or you're gonna be super happy that you timed the one deal, or you're gonna be happy that you got a good enough deal that makes sense, and we below where we were on the high side, so we can eventually get back up there. It's kind of been our philosophy, and obviously looking at the replacement cost of things. So how much does it cost to build that property today? Am I paying more than that or less than that? Because that was an actual thing. Or you paying more than replacement cost, and that used to happen all the time when money was flowing freely. So with capital markets slowing down, I think now pricing will reset a little bit, but I think the fundamentals of cash flow is still there and NOI. So that's something we just all have to focus on.
Cool. So, man, the people who listen to this podcast are, you know, either active real estate investors, right, or passive real estate investors. Some of them do not know yet, but every single person who listens to this podcast has chosen to use real estate as their wealth creation vehicle, right? Either by investing passively or by investing actively, right? So, with that in mind, there's three more things that I want to ask you.
Yeah.
So the first thing is, what's some advice, some insights, right? You touch on the topic of like closing, right? Closing fast and pushing that close. So what is some feedback, some insights that you can share on being able to close a deal, right, quickly, and what are some of the downsides of not closing deals?
Yeah, so closing the deal, of course, is there's the capital stack that you've got to solve for. So you look at your sources and uses, and you say, okay, if I'm going to go put debt on a property, obviously we're investors, so we're trying to lever our returns. Put 65, 70% debt on the project, um, and then the remainder is the equity that we've got to raise. So, $1 million property, putting 700,000 debt, and cost 300,000 capital to raise. So knowing where you can raise to is important. And then knowing your debt is super important in these days. Getting getting your capital stack figured out, speaking to your broker, having them run your pro forma, run the rent roll, run the E12, make sure that they can lend to those numbers. And the horror of not closing is losing earnest money, and then potentially um, you know uh, your hard-earned time and capital, like those inspection costs and all that stuff. So you do have a loss of exploratory costs, but sometimes that happens, and sometimes the deal doesn't work out. So um, you know we've certainly seen a share of that, and acquired land and not been able to get construction financing in place for that, and lost some earnest money on that. And that's part of the game. So I would say, understanding your capital stack and knowing exactly where that's going to shake out so that you can close in time.
Cool. So whenever you don't close, there's a cost, right? Time, effort, money.
Right?
But if a deal doesn't make sense and you don't close because you learned, you realize that the deal wasn't gonna work, it's better to not close, right? It's like
Yeah,
cutting your losses in the stock market, basically.
right. Yeah, exactly. So that happens. You know, we're in strange times with the lending environment. So for sure, it's been a lot more stringent than it has been in the past.
Mm-hmm.
Right. And people got to be creative and figure it out. As I say, real estate investors are problem solvers.
For sure, yeah. Yeah, man. Actually, talk to me about that. So, one of your superpowers is like to solve problems, right? Um, so do you like see things people don't see, or what is it that you attribute to your ability to solve problems, man?
I think it's more of being a thought engineer. I've always been, and my mother will probably attest to this, but um, as a child, I would take my toys apart to see how they worked,
Uh-huh.
to see how things worked, and I kind of ended up doing that in my career as an auditor, going and seeing how companies work, how things work, how processes work, and then where processes fail, what's the corrective action to make sure that this doesn't happen again. So I spent a vast amount of my career doing that kind of analyses and work, and connecting processes and people and technology together. And so applying that to real estate, again, that's a lot of that. It may be simplistic in the sense that it's one person renting, and then a unit in a building, and they pay you money, and that's it. But sometimes there's challenges. Sometimes there's challenges on that's like operational, and then sometimes there's challenges on the buy side where your lenders pull out, or there's
Yeah.
that cut proceeds, or that happens all the time. They'll sell you on one thing, and then it's a different thing presented at the closing table. So working through those kinds of things, and not being somebody that's like, hands up and just quits, but being somebody that's okay, this is a problem, how do we solve it? Being solution driven is critical in real estate. I believe, and that's kind of what what I've managed to do over these years. Is there's always different challenges that come up, and you just got to stay calm, positive. Have a good response. Don't react. Get the facts. Figure it out. And then make sure you have a team. Make sure you have a great group of people around you that you can bounce ideas off. Mentors. Spouses. Make sure they're good quality people, and that just helps you be a better problem solver, be a better leader, better person, right?
Yeah. Yeah, man. So you're a thought engineer. I really like that. There's a saying that I really like. I don't remember who came up with it, but it says that um no, like 80% of people don't think, 15% of the people think that they think, so they're at least trying, right? And then
Yeah,
5% of people actually think, right? They're the ones who are ruling the world. So, you know, basically, man, it's hard to think, right? Um, and you've just given some amazing insights on how to think, which is be patient, stay calm, instead of react, respond, right? Um,
yeah.
and persist. Don't just whenever a problem happens, don't be like, oh, this didn't work, I'm gonna give up. Well, no, right? You gotta like
It's
stay.
most people just give up, and they, it goes back to your fight, flight, or or freeze responses, right? You got those three at the base of your core as a human. That's how you respond. And when you use your lower brain, that's when you're either fight, flight, or you're like frozen. Well, if you recognize that you're in that position, you say, well, I'm not in that right state of mind to be creative, to be uh, confident, to be clear, which is your frontal cortex. That's where all of your creativity is. That's where your love is, where your compassion is. That's where all the good stuff is. So you got to train yourself uh, to listen to your thoughts and say, well, oh, am I using my upper side of my brain? Am I living above the line or am I living below the line? If you're living below the line, then you only have three responses: fight, flight, or freeze. But at the top, you have creativity, you have thought, you have compassion, you have confidence. So you can use all of the different skills that your brain has. Um, Unfortunately, we're not taught this, and a big shout out goes to Dr. Bill Crawford, um, who came up with this concept of the lower brain and the higher brain and lower brain and yeah, confidence. So yeah, check Dr. Bill Crawford out on YouTube. He's written many books about this. It's fantastic.
Cool. So how can you switch from, well, first I think you realize that you're in a lower brain, right? And then you got to make the change, right? Consciously. So what are like the steps or some keys to switch from a lower brain to a higher brain?
Yeah, so it's practice, right? It's being thoughtful, and the way to do it is just repetition. So
Yeah,
if you could train your mind to know what that state feels like when you're above the
for
brain
sure.
and not below,
Uh-huh.
then drawing on that in those situations is very easy. So what Dr. Bill Crawford recommends is, um, in the morning, it's called brain. So breathe. So breathe in 4 times, 4 count, hold it for 4 counts, breathe out 4 counts, and then say the words relax. So relax. And
Hmm.
then you ask yourself some questions. How do I want this morning to go? How do I want to, if I had a video camera on me and my kids and my abuela or whoever is looking at me on this TV, right? How would I want to behave? How would I want to respond? How would I want to be seen? And just asking yourselves those kinds of questions is going to put you in a better mindset. You do it again at lunchtime. Breathe in for 4 counts, hold it, 4 counts, breathe out, and you say, relax. The words relax is to relax your body, not your mind. And the words actually relax your nervous system. And then you're activating your upper system um, by asking yourself better questions. So,
Yeah.
lunchtime, you're like, how do I want the rest of my afternoon to go? What do and then by the evening, before you're going to hit like heavy traffic and all that stuff, how do I want to respond?
Yeah.
How do I want to show up at home for my wife and my kid? How do I want to, do I want all of my day's stuff to come with me, or do I want to be an awesome dad, energetic, loving, helpful, right? The way you should be. And that's a good way to retrain your brain. So it's not an overnight thing. There's a 21-day challenge that he has.
Takes
So
practice for sure.
yeah,
Um, and then if you do it enough, right, you'll get to the point in which you naturally respond to things instead of reacting, right? Um, so yeah, I can see
that's
how
right.
that works. Actually, I do it. Yeah. So yeah. So the feedback
It's like
that you gave
like
was great.
mindfulness.
Yeah, for
Yeah,
sure.
exactly.
So it's being aware, right? It's like knowing how being on a lower brain feels, and then knowing how being on a higher brain feels, and whenever you're on the lower brain, catching yourself and choosing and being intentional on how is it that you want to respond, for sure. So man, so what are some of the deals that you got going on, right? For anyone listening out there who, is an active investor or a passive investor looking for an incredible deal, is there anything that you're working on right now that you may want to share?
Right now, we're in pre-stages of some deals, some new construction deals. Happy to have a call with any potential investors. Like I said, it's a relationship game with me. So, they can reach me at our website, dreamstoneinvest.com. Or if you want to send me an email, go info@dreamstoneinvest.com. and it will come to my assistant. And yeah, I'm more of, trying to understand an investor strategy and what they're looking for, and seeing if we have something that fits. We want to create those win-wins with investors, and so I think that's something we kind of pride ourselves on at the Dreamstone.
For sure. Before ending the episode, man, I have a couple of questions to ask. The first one is, if you could go back in time, right, to the beginning of your real estate career, what changes or what are some things that you would do differently to accelerate your growth a lot more than what you have been able to do right now?
I think I don't think I would change anything. I think what I would tell myself, and this is something that I've been telling everybody. I've just recently heard this on another podcast, um, and I think it's the Navy SEALs motto, and we spend so much time trying to get somewhere quickly, and it's like quick action, action. We've got to take action, but this motto, this saying has kind of been very impactful for me. And if I had to go back, I would say slow is steady, steady is smooth, smooth is fast, fast is deadly. There's so much to unpack there, but what that's saying is get everything smooth so that you can go fast.
Yeah.
That's scaling up anything. It's like making sure, take a step back, throttle down 20%, look at, because we're all busy on our day to day, trying to get to the next deal or the next, company acquisition or whatever. Um, take some time, reflect, improve operations. And I would, one thing I would do is I would go back and start EOS way earlier, way earlier. Yeah.
Empire operating system. Okay.
The entrepreneur operating system.
Okay. Oh, okay. Yeah, man, for sure. So actually, I have a story around that. I go to Mexico a lot, and then on my way home, I pass by homes, right? And then the other day, I passed by a home of a guy who was, constructing his house, and he made like a little, I don't know, he was like building something, and he built this like little thing, really small. A couple of months later, I came back and he had destroyed it, and he built a mid-sized one, right? A couple of months later, I came back, and then he had destroyed it and he built a big one, right? And the reason this happened, man, is because he was just go, right? Let's do this with the resources that we have. And then we, and he
Yeah.
and then I imagine that he had more resources and he was like, oh no, you know what? Let's throw it down and do this, right? And then I imagine that he had more resources and then he was like, no, let's throw it down and do this, because he didn't stop to like think, right? And
What
and
is
and he
what's the ultimate? Yeah.
yeah,
What am I
he,
looking
he
for?
yeah, he didn't have a clear vision of what he wanted, and he had to redo the work three times, man. So instead of
Yeah.
just like go, you should just take a step back and really think about what you want, and then make sure that instead of being like a shotgun and just doing a bunch of things, you're like a sniper, right? And you just know what you want, and then boom, you go and get it, right? And
Yeah.
smoothly. Yeah.
Smooth. Yeah. Smooth is key.
That
Smooth
was
is
like a
deadly.
little representation of this, right? Coming back to my house
Yeah.
in Mexico, it was like, damn, this guy, he's like doing so much work, right? So
Yeah.
yeah, man. So the next thing, so you're all about relationships, man, and networking. What is networking and relationships, as we talked about in this podcast, is a huge component in real estate investing success, for raising capital, finding deals, getting partners, and all of that. So
Yeah.
what advice would you give to any real estate investor out there who might be looking to build relationships and building network a lot more effectively?
Yeah. So get involved in your local chapters. There's so many different uh, events that are being held all across America. We have meetups. There's a lot of virtual meetups that occur. I'm not a big fan of virtual meetup. I like to shake someone's hand and you know uh, share a drink and have a conversation. Whereas the Zooms are kind of just like it's like a lot of people looking at each other. Kind of I
Yeah.
don't I a little bit more personal, a little old school, but I think yeah, there's local meetups, there's your national realtor kind of events, and there's bound to be somebody in your city doing something like that. And if there's not, maybe you can do that, and that could be a stepping stone for a platform for you in the future. I know of a real local realtor here in Atlanta that runs a meetup, and it's phenomenal. It's always like 200 to 300 people every time we get together. So and he's been doing that for the last 5 years, and it's impressive. So, um, there's power in networks.
For sure. So, man, any last piece of advice or message that you may want to share with the audience before we end the interview?
Yeah, no, I think again, going back to that quote, being smooth, taking the time, don't rush yourself. Real estate's it's slow. It's a process. The beauty in real estate is not the 5 year hold. It's the 20, the 50 year hold. Like that's a whole nother game that no one's teaching anybody about that,
Yeah.
right? So they're teaching they brought this Wall Street thing into real estate. Like look at a 5 year business model or 10 year business model, and evaluate. But well, what happens after you're 30 when you have no mortgage? You've paid it all off. That's a beautiful thing, right? So,
Mm-hmm.
um, you know, building a portfolio on the side that gets you there is key to create that wealth. And the 5 year business plans for me is just a way for you to create another portfolio, if you will.
Yeah. So, man, you know where like feeling rushing everything comes from? Scarcity, man.
Yeah.
It comes from
Oh
like
yeah.
not having enough time. You're thinking that you're gonna run out of opportunities, and I've found,
Yes.
in my own personal growth and evolution, I found that like the root of all limiting beliefs and everything that is holding you back or me back or everyone back is two things, man: scarcity and not feeling good enough. Like
Right.
if you think about any limiting belief, it comes back to scarcity or not being good enough.
Yeah.
Right. So I'll leave you with that, man. Maybe think about it. It might be valuable. You mentioned your website, which we're gonna have wherever this podcast appears. Is there any other place that would be good if anyone wants to connect with you and maybe talk about what you got going on? Any other place?
Yeah. So we're on LinkedIn, Instagram, Facebook, Dreamstone Investments. Check us out, and yeah, we've you could contact us on those platforms, and then we'll get back to you for sure.
Awesome, brother. So, thank you very much. I really enjoyed this episode, man. We'll have all of your information wherever this appears, and I'll see you later. Okay, man.
Thank you. Awesome.
Bye, bye, man.
Thanks.
Thank you for listening to the Modern Real Estate Investor Podcast. We want you to know that we love and appreciate you, and we're super grateful about being part of your journey of becoming a successful real estate entrepreneur and having it all. Please share this episode with a friend who you think will be impacted positively. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be across all areas. And if you thought this episode was really valuable, share it on your social media as a post or a story. We have a special gift for all of those who contribute to the Modern Kings and Queens movement. So for those of you who decided to share this episode and help us spread our message, send me a message letting me know on any social media platform at Alex Ramirez, the Modern King. I have a special surprise for you. Thank you for watching, and I'll see you later.